Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
I love that video. It's so tremendous. Makes me feel good. Shows me all my friends, all my connections. It's really wonderful. I hope you enjoy our show. It's great to see everybody today. There's the announcement popping on my computer. I hope everybody's having a terrific day. I want to provide nothing but happiness, good information, good energy, and joy. So enjoy, sit back. We've got a great guest today. We've got Ed Cairo. He's been spending the last 15 minutes making sure his light's perfect and his hair's perfect. I got a secret for him. That's never going to help. He's always going to be his old self, and that's no problem for me. I love you, Ed Cairo. Ed will be with us in just a second. Excuse me. Of course, I want to start off by thanking our sponsors for well over a decade, our friends at Warren Henry, Eric, Larry, Warren, Ismit, Maytal, the whole team over there, Gio. They're wonderful people. They treat us like gold. We'll talk a little bit more about them during the show. Warren Henry up on 151st and Biscayne, up on Main Street in Gainesville, down in South Dade, and of course down in the Keys. All great cars, all great service, all great positive energy. When you're a member of the Warren Henry family, it's a wonderful thing. And now let's get started with our show. We've got Ed Cairo and the Mortgage Brothers. Where's that handsome devil, Mr. Mendoza? Where is he? Well, I see his sign, but where is he?
Oh, there you go.
I caught
Hello,
you there,
Jim.
Big Ed. How are you? Welcome to the show.
I was just doing my hair, being that you just introduced me with my
You look
looks.
marvelous. You look marvelous. Did you put gel in that today?
How are you, Jim?
I'm doing great. So before we get started with the home loan stuff, how's the farm? I know you got your farm up in, is it Kentucky or Tennessee? I know it's one
Tennessee.
of those
Tennessee, just west of Nashville.
West of Nashville. So you like that? You like going up? You fly into Nashville? How do you do that?
I fly out of Fort Lauderdale into Nashville, and I'm about an hour away from Nashville going west. And I have a 54-acre farm up there, and kind of gets me in a different mental place for a little while. And then I come back to South Florida and do some mortgages.
It's wonderful. It's wonderful. It's wonderful. You got just enough gray hair to know what you're talking about here.
I do. They say it's elegant, though. They say
you're a handsome devil. Don't let anybody tell you anything less. So let's talk about this a little bit. Tell everybody your background, how long you've been in it. Tell them about the brothers. You know, we've closed, a whole bunch of loans now. My friends and I that you've helped, my customers, we all thank you for professional service. I thank you because without you, I'm really not a good mortgage guy. Tell me a little bit about what's going on with the company. How long you've been in business? You bought a new building, so you got a whole new headquarters thing going on.
We do. We have a new headquarters this year. We renovated this building, and we're in our new location in Lake Worth, Florida. I've been doing this for over 25 years. I had a real estate license. I still do, from 1983, so I'm dating myself to a certain extent. But I've been doing mortgages ever since, and the mortgage industry. My thought was to be a realtor in the beginning, and then I thought I would get just a mortgage license to possibly get some referral action, and the mortgage sucked me in. So I've been a mortgage broker owner for all those years, and it's been great. It's a tremendous business. We help people, and that's really the key to our success is to, really be happy that we're helping people attain their dream.
So, that works right into my personal brand, too, because my brand is that I self-actualize by helping people achieve their dreams and goals. I do that by solving their problems and giving them peace of mind. You can't steal that, Ed.
Okay, I will not.
You can't steal that. So tell me about your team. It's you, it's Greg, it's Paul. Tell me what Greg and Paul do. Paul, I think he started to walk again. Good for Paul.
Yes. So I'm the middle brother of a younger brother and an older brother. So my older brother's Paul. He had some issues with his back. He had some major surgery. And this week, as a matter of fact, he's really coming around. So he's doing well. So he's walking around now, which is great. He wasn't before. But he's our closer. And without him, we can't get these deals done. And he's a numbers specialist. So very few people can keep up with him when he goes through closing statements. And what he does is not only gets the deals closed on time, but he'll go over the numbers with the clients beforehand to make sure before they go to closing that they understand exactly what the numbers are. If something needs to be fixed, he does it on the spot. That's what he does.
You know, everybody thinks it's really easy. It's really kind of complicated. There's formulas and things that are required and things that are optional. And, you know, closing statements are always confusing. They always have too much on them, you know, and stuff. So it's really great to have that service. And then you got Greg. What does Greg do?
So Greg is our younger brother. He pretty much brought us to the modern day, you know, because Paul and I were two dinosaurs doing this, running this business.
Greg's no spring chicken either, for the record.
He's not, but he's got his MBA, and he came in here and he cleaned us up. And basically, Greg is the backbone of the processing part of the business. What happens is we have three segments. They come into me first. We structure the loans, talk to the clients, do what we need to do. I upload to the lenders. We only upload what we need to upload, not everything. So we're careful with that. And then once it gets past me, then it goes to Greg. He's the middle guy. And he's handling all the conditions that the lenders will ask for. They'll ask for extra bank statements and different things that need to be gotten from the clients. So he'll do that part. And then it goes over to Paul, and Paul's the closer. So we have a nice 1, 2, 3 punch here, and all our loan officers kind of work within our system, our framework, and it works well for us.
So you mentioned something in passing that I think is very important. You said you upload just enough. What did you mean by that, and why is that really something important and something that somebody would care about?
Well, because, you know, every single loan is different. Every single client is different. Credit scores are different. Loan programs, things they qualify for, their income. There's so many different factors involved. So when we pre-qualify somebody, we're looking for all those things. You know, a lot of times if you go to a retail bank, they'll say, oh, I make $100,000 a year and I have 800 credit scores. Okay, you're pre-qualified. I mean, they have no idea what's going on. In our case, I collect all the documents. We look through the documents. I read every single bank statement, everything, because if there's certain things that don't need to go into a lender, I don't give it to them unless it's asked for, because every little thing, you can have a bank statement with a certain deposit on there. Now we have to start verifying deposits, which had we not sent it in, that's out of the way. So there's certain things that you don't have to give the lender unless they're asked for. So we're very, very careful. And what happens is, if we do our job correctly on the front end, then the middle and the end goes very smoothly because there's not a ton of conditions, because quite frankly, I'm underwriting the loan before it goes into underwriting. So I pretty much handle the conditions that the underwriter would see. I handle a beautiful, clean package. They don't have much to do.
So basically, you create a situation where people's information remains private unless it needs to be made public.
That's correct.
And you pick apart the different tax returns and underwrite the transactions so that it's a clean submission to the lender. So that makes it easier for the lender, and the lender's just a human being, and they want to work on a file that's clean and easy before they work on something hairy, and that's why people use you.
That's exactly right. And the lenders tend to close ours quicker because they know when our loans come in, it's a slam dunk for the most part. And really for the client, I mean, the client has 15 different bank accounts with all this money, and all I need is one. There's no reason to send the rest of them, get their information out to the public, to anybody. There just is no reason. So I don't even want those documents. If I need them, we'll get them, and that's where we do it.
So let's start giving people a little bit of information about something other than you and your brothers right now. I know that you talk to a whole bunch of lenders, private lenders, bank lenders, banks that hold the mortgages, banks that package them up and sell them. What are some of the trends you're seeing? Because rates started to go up about this time last year. Mm-hmm. The world changed. I ran into some of our clients the other day. They did what you said they should do. They stapled their mortgage on the front of their door, and they leave every day and say, thank you for that sub 3. We did one that was sub 2. Mm-hmm. Thank you for that fabulous, delicious loan. But rates have gone up. They've we're ending the era of free money. We're getting back to what I would call the normalized cost of capital right now. that created a little problem as we move forward, a little bit of pain. Maybe we're facing just a little bit more rate increase, but not that much. So we're stabilizing now. So when you talk to the different lenders, what are they telling you about the trends that they're seeing?
Well, I mean, I'm going to just start this answer by telling you that, right now, this year, there's 22,000 loan applications per day going in, mortgage loan applications going into the lenders. Last year at this time, there were 20,000. So it's not the industry. I mean, the industry is busy and we're busy. We've had a tremendous.
Is that national, or is that just the people you talk to?
National. That's the national number. So houses are still being sold, and they always will, because people have to live somewhere. The rents are extremely high. So our job is to figure out how we can get somebody in a piece of property where it makes sense. And if they're throwing away $3,500, $4,000, $5,000 a month in rent, if we can figure out a way to have them, own the home with this kind of money and be able to write off the interest, they're so far ahead of the game. And down the road with appreciation, as we all know, they'll be way, way ahead of the game if there's a way that we can figure this out. And that's really why people go to brokers, because if you go to a lender, a lender meaning Bank of America, Wells Fargo, who's now out, but all the, more Chase or whatever, these guys are order takers, and they're handcuffed. If you don't fit that box exactly the way they want it to be, you're done. They've taken your application fee, you've paid for an appraisal, you're at $1,000 and you don't have a loan, and that's 4 months later once you've come into under contract. When it comes to a broker, we have 50 or 60 or 100 different options that we can work with. First, seconds, combining two different things. We have no income verification loans. We have bank statement loans. There's all kinds of products that we have. So that's why it's so important to qualify the person up front and just figure out what the best options for them are. And the bottom line is we're going into this with them owning a home for their family. That's the reason why we do it. So once it happens, then it's a great feeling for everybody.
So, there's all kinds of reasons that people get mortgages. We've done one where people had incredibly high interest rates on their credit cards. They had lots of equity in their home. Talk a little bit about that, how you're really helping people lower their overall cost of capital, even with a 6%, 6.5% mortgage. If their credit card is at 20, 22, 28, or 30, it seems like this is a way to go.
It is. And what people have to understand is when they owe money, they're paying X amount of dollars. There's no way around it other than to pay it off or, go bankrupt, I guess. But whether you owe the money on the mortgage or you owe the money on a credit card, if you have a credit card that's 25% and you're paying the minimum, they say it's 27 to 30 year payment, no different than anything else. So what we'll do is, we're pretty much advising them financially for their future. When I talk to somebody, I'm not just talking about this one particular loan. I want to know their background, their children, what their future is. Do they want investment properties down the road? Are they looking to buy bigger homes down the road? What exactly do they want? And once we figure that out, what happens is that, if somebody's having a tough time because they have way too much debt, we can take a look at that. On the credit report, it's going to tell us exactly what they owe, right? And if we could structure a loan that'll pay off a lot of that debt, there are times that I'm saving people $1,000 a month, $1,500, $2,000 a month. That's big dollars, And the way we do it is we refinance the house. They're borrowing at 6% or 6.5% or whatever the case may be. It's way better than 24%. And what I try to do is the key is to get them out of debt. So we explain to them and we show them that, look, whatever you're saving, we're going to start putting that money towards this debt, and we're going to start knocking it down faster. So that's really the key. And in a lot of cases, in a couple of years, these people are out of debt. Now, granted, their mortgage payments, it's $300 more than it was before, but they're not paying $1,200 or $1,300 more every month on credit card debt. So in a lot of cases, that's really, really a good way to go. Plus, we're doing a lot of equity lines nowadays too, and the equity lines will do the same thing. We'll put a line of equity on their house, and they'll pay off their debt that way.
Ed, I want to ask you to move over a little bit and show your NMLS number, and then I want to talk about that for a second.
Let's see that way. Okay.
There you go. Okay. So you talked to, there you go. I think that's actually a good place for you to sit, given the legal ramifications of what the NMLS is. Let's talk about that for a minute, because you've been a mortgage broker for a long time, way before anybody needed an NMLS number. Talk about the changes that you've seen, why there's an NMLS number. And you mentioned earlier that you're really an advisor. I think that's very important. Let's start with the F word. Talk about the fiduciary role you play and why that's different than things that happened pre-Lehman Brothers crisis.
Pre-Lehman Brothers, at that time, it was a little bit of the Wild West. You know, people were getting licenses. Now, what they were doing is they were getting state licenses for the mortgage industry. And, you know, if they were criminals and they did something bad in New York, they ran down to Florida, they got a Florida license, and they kept operating down in Florida. And this went on all over the place. And there was a lot of unscrupulous people, because the lenders at that time just wanted to do deals. They didn't care anything about the people. And they would come into the brokers and say, hey, if you got somebody with a 580 credit score, one day out of bankruptcy, 90% loan, no problem, you know. And they offered these programs that were really, really difficult. If you put the customer in that loan, you know, chances are they're going to have trouble. So at that time, for me, you know, I didn't do that. You know, I wouldn't do it. And that's probably the reason why we're still around. It is the reason why we're still around now, because I always said to the person, you know, at that time, houses were appreciating at 30 or 40% a year, right? That's not normal. The national average is 5 or 6. You got to go by that number, maybe 4 or 5. Don't go by this 30% a year. They would, you know, their house tripled in value in 2 years. They stripped the cash out of it and bought 2 more houses at another $400,000 a piece. Well, the market changed, and guess what happened? They lost all 3 houses, including the one they're living in. So when the mortgage crisis, you might call, came through, and Dodd-Frank was the legislation that came through, which it cleaned up the mortgage business to a certain extent. I mean, maybe a little bit more than they should have, but it definitely cleaned it up. What they did was they had a national licensing system, and that's what this NMLS number is. So now it's a federal, not only we get state license, but we're also the federal license. They're watching everything that we do. And that number that you see is the number for this particular company. But I also, as an individual, I have my own NMLS number, as you do. So every single loan that we do, that number goes for the next 30 years. No matter who buys it and sells it, it goes from one lender to the other. Our number is on that loan. So they're following us through the process. If we did something unscrupulous, they'll find out, right? So you're going to lose your license. And once you do, you cannot get a license with any other state. So that's one of the good things that happened. I mean, it took out a lot of unscrupulous people out of our business. And the broker business was probably 50, 60% of the mortgages back then. Now we're climbing. We're back at about 20, 25% market share. And that's really the key. Our market share is climbing. The brokers now, it's a whole different set of individuals. There's background checks. There's all kinds of stuff that they do now. So it's like anything else, you know, and I always tell my loan officers, you know, you're not here to try to make as much money as you can. That's not the key. The key is you're here to help somebody and figure this out, and you're going to make a living as you do it. That's really what it comes down to.
Well, I think that's a great place to take a break. We've gotten your perspective. We've gotten a little bit about what's going on. I want to take a quick break. We're going to come right back. We're going to talk about some of the programs, some of the rates, some of the terms, the type of people that are borrowing, the borrower profile, and why people should do a loan now. So that's a little bit of a heads up, Ed. You can start putting your thinking cap on, have Greg feed you all the answers. And Mr. Mendoza, please do your thing. Well, we've got Ed Cairo on, and you can see from that Ed and I are basically come from the same place. Our both our brands are basically to help people achieve their dreams and goals. Another group that you could say that about is our friends at Warren Henry. All three of us have a value system alignment. Warren Henry, American Home Finance, Freedom Business, Sandstone Realty Advisors. We're all aligned perfectly. It's always all about you. We'll, in fact, have the guy that taught me that, Brewster Kell. He'll be on in a couple of weeks. High five to Bruce for the all about you thing. But it's great being a member of the Warren Henry family. They've been sponsors of Freedom Business for over a decade now. We get cars from them repeatedly. I mean, I must be on my 15th or 20th car from Warren Henry over the decades that we've gotten. They're incredible people. It's wonderful to be a member of the Warren Henry family. We're growing up with Larry and his beautiful kids and Courtney. Before that, Warren, and we watched Larry grow up. I met Larry when he was the F&I guy at the Infinity Place, and Larry's first job in the auto industry was washing cars. So Larry knows the business from the ground up. We love Larry. Eric Day is a futurist and a forward-looking thinker. Warren Henry's a tremendous businessman. Ismet knows the products, and Maytal knows how to get them fixed. They're all great people. We love being part of the Warren Henry family. And remember, when you're looking to buy or lease a car, you want to get every advantage that you can. That's why you check out Warren Henry. Land Rover, Range Rover, Infinity, Jaguar, and Lincoln up at 151st and Biscayne. Up in Gainesville on Main Street, they've got a gorgeous store where they sell Audis. Sent one of my friends up there the other day. Down in South Dade, they've got their Land Rover, Range Rover store. And the Keys, they sell everything, all the different nameplates, Jeep, everything. And what do all these cars have in common? Well, they're all great cars, and they all come with the Warren Henry advantage. The long list of services, you hear me rave about it all the time. I talk about how I lose my keys and they replace them. I talk about how I scrape my rims. They polish them up. The most important thing that they do, though, is they make sure you feel comfortable with the deal that you're getting. They guarantee you're going to get the best value on your trade-in. They guarantee you're getting the best price on your new car or that you buy or lease. They will let you trade it in for 72 hours, which nobody really ever trades it in because they love those cars. And, it's just a tremendous experience. You should join my wife. My beautiful wife has one of their brand new QX60s. I have the 70. My mom has the smaller car. We all love our cars. We all love being a member of the Warren Henry family. You should be a member of the Warren Henry family too. Always the best price, always the best service, always Warren Henry. Well, I really appreciate my friends at American Home Finance. They're tremendous. We'll hear more from Ed in just a minute. It's just one of the ways that I help the people that I know and the clients that I have maximize their financial capabilities with real estate. In fact, a number of the developers that I've worked with have also worked with Ed and I to get home loans for both themselves and their family. Ed is very creative, very transparent, very honorable. It's why I work with Ed. I'm very proud to be a member of their team and to have them be a member of our team as well. Reach out to me, DM me, give me a call. I work with family offices, high net worth investors, institutions all across the world. I've got clients now from Brazil, Argentina, Australia, New Zealand, Europe. We're doing some very creative things we'll talk about again. You heard last week where we interviewed Jim McCarthy about it. So we've got incredible forward-looking solutions. People call me for their solutions. Sometimes they're not perfect, but we help them get the best transactions that we can. Excuse me. Everything from triple net deals to apartment buildings, industrial projects. We work with some of the biggest families and developers, self-storage, land, creative financing. So reach out to me, DM me, give me a call. Remember, my personal brand is that I self-actualize by helping other people achieve their dreams and goals. I do that by solving their problems and bringing them peace of mind. So remember, whenever you call me, it's always all about you.
Welcome back to Freedom Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
I'm such a social guy. Look at all the little places we broadcast live or where you can pick up our information from. In fact, Mr. Mendoza and I were fine-tuning the YouTube channel earlier today. You'll find even more information. You'll find great historic library that we have up there. You can go to freedombusiness.com and hear any one of our 700 and some odd shows. Thanks to Mr. Mendoza and Becker Carlson for going through that indexing, getting it all loaded up. It took them months to do. They're tremendous people. High five to Rebecca Carlson as always. Now we're back with Ed Cairo. Where's Mr. Cairo? Looking good, Eddie. Looking good. So let's talk about what's going on with rates. Everybody always wants to talk about rates. They're really freaked out that the rates are double what they were before. What they forget is that the average rate for the last 30 years has been 8%. We're still a point and a half below 8% for the best borrowers with the best mortgages, and even people that are a little bit damaged, we're getting them with a 7 handle. So Ed, talk a little bit about what's been going on with the interest rates and how we can help people lower their overall cost of capital with a home loan or a HELOC.
Well, the one thing about it is, I think that a lot of people are starting to settle in now, and they're starting to get used to the fact that, you're right. The rates are really where they historically have been. They're actually lower. They think that, the 2 and 3%, gave people a false sense of hope, so to speak. And, the one thing I can tell you is when people are purchasing homes or even refinancing properties, especially purchasing homes, the rate might be a little bit higher, but you're getting a home for a lot better price. And what I mean by that is, prior to this, people were lining up 13 contracts, paying $100,000 over asking price and all this kind of stuff, and they end up with a 3% rate. Now, the rate's a little bit higher, but the sellers are giving contributions. They're not selling as fast, so you're actually able to secure the asset at a better value, in my opinion. And the key to this is the fact that the appraised values are still holding strong. So if you could acquire that asset for 50 or 100,000 less than what you paid for it, the key is acquiring the asset, working out the deal as best we can. The one thing that is an overriding factor is we could refinance this thing down the road. If the rates get a little less or whatever, we get you a better payment down the road. So if you wait, and people do say that, well, rates are a little higher, I'm not going to buy, I'm going to wait. Okay, wait. And then 2 years from now, the house is another couple of $100,000 higher, So, really the key is securing the asset, getting the best possible deal you can. And the applications, like I said, are up. So it's not like people are not buying houses. People get used to it.
So let's talk about some of the programs. We have people that we know that are veterans. They can get a VA mortgage.
Yes.
We have people that are buying properties below $1 million. They can get a federally guaranteed mortgage.
Mm-hmm.
And we have people that are buying larger homes where with them we get them a jumbo or super jumbo.
Mm-hmm.
We have people that don't have W-2s. We have people that do have W-2s. We have people that have very limited down payments. We have people that have bad credit. We have people that have good credit. Talk about what's going on. We have investors that we work with also. What's going on with the borrower profile, and some of the different programs that you have?
What it seems, the way the market is dictating now is, people don't qualify for what they qualified for a year ago, only because the rates are obviously a little bit higher. That doesn't mean that they can't purchase some of these properties. And what I mean by that is, it's not that we would stretch, their income to the point where, now they can't go out to dinner or anything like that. But in a lot of cases in the household, his wife, let's say the customer's a man who's purchasing, his wife has a job and she's not really showing a lot of income, but yet she's doing quite a bit. She's doing different things. We could take that into consideration and say, all right, the household is doing X. So therefore we can now, structure a loan that makes sense for you for now and make sure that you can qualify for it. And then again, we'll refinance it later on. So, That's some of them. Other people, you know, have. Excuse me one second. Yeah, I'm on the radio.
Yeah, that's okay, Ed. We know that you're in the middle of the office and you're trying to close deals and your brothers are a little bit emphatic. We understand that. Just go like this.
Say, excuse me. Some people don't exactly show a lot of income on their tax returns for all kinds of reasons. Maybe a startup business where they're making the money. It's just that they, you know, they're writing off a lot of expenses and things like that. So we have programs that, you know, can take that into account, where we could take 12 bank statements and use that for their income, and they'll get a nice loan based on that. We can do 1099 income. We can do no income verification if needed on a primary residence, which very few people can do. We can do that. There's all kinds of ways we can structure these loans. And we can do first and seconds. We can do equity lines nowadays. As a matter of fact, there's one of the lenders coming out with a, which Jim, I don't know if you knew this yet. They're coming out with a bank statement second mortgage.
Wow.
Yeah. So if they don't show enough income for a second mortgage, but they're making deposits and they're making money, and again, it's not that anything is unscrupulous, but a lot of people, if you have a brand new company, it's making money, except you're buying equipment and you're writing off all kinds of different things. So it's not that you don't make the income, you just don't qualify based on the Fannie Mae terms. We have ways to do that, and that bank statement second is going to be very big, because that's going to help people out a lot, especially paying off their debt.
Now, Ed, a lot of people are, the baby boomers are now the earliest are getting into their 70s and 80s. They have a lot of equity that they built up in their homes. They want to age in place. They have Social Security. Maybe they're a little short on their monthly bills and cash flow. The reverse mortgage has always been something that's been out there that people have been reluctant to do. What's changed, and are reverse mortgages something that people should be considering giving them, helping them out with their aging parents?
Absolutely. Reverse mortgage definitely has their place in the marketplace, because, if you have a senior that is on a fixed income, like you said, they want to live in their home, they want to stay in their home, and, their payment is, $2,000 a month, or whatever the case may be, and yet their Social Security, they're a little tight. As long as there's equity in the property, what we can do is we'll do a reverse mortgage on that property and eliminate the payment completely, which, if you think about it, I mean, that's everything to them, because now all that cash flow can go to all the things that they really want it to go for or need to have it to go for. And the old days of you do a reverse, if you die, they take your house, that's over. That's not the case anymore at all. I mean, the government stepped in a couple of years ago. They tightened up a lot of the rules. The bottom line is, on a reverse mortgage, you're not paying a payment, but what they're doing is they're subtracting from your equity. That's really the way it goes. So at the end, when you're ready to sell the house or you pass away or whatever for your heirs, whatever is left on there, that's no different than a forward mortgage, to say, okay, the house is worth $600,000, $340 is owed. You get the difference if you had, if it was sold, or let's say in a state, or whatever the case may be. But the key to this is no payment, and for an elder person, that's really a nice thing to have.
So, Ed, I want you to move over again, show the NMLS number, keep the government happy.
This way, yep.
There you go, right there. You're fine.
Yep.
And talk a little bit about these no income verifications. Some of the more creative things that are out there that'll help people get into their home or pull some money out of their house.
A lot of times, if there's a couple of things. I mean, good credit score is important, and people have to understand that they have to pay their bills, and their credit profile is everything. If you have a good credit score and you have equity in your property, those two items, then we could pretty much help you with your cash flow, right? If you're not showing enough income, let's say, or, as a self-employed individual, like if you're a W-2 person, there's no magic bean to that. You make what you make, and that's it. That's your income. But when it comes to self-employed people, we analyze the corporate returns. There's a lot of depreciation that we put back in. There's all kinds of ways that we can help them, come up with as much income as possible to try to qualify. Now, like I said before, if in the event that, they just don't qualify, there's a lot of different programs that we can do to get them to the point where, this is going to make sense to them. And basically, there's I'll give you an example. An investor wants to buy a piece of property. Okay? Sometimes investors end up with multiple properties. When you have multiple properties, you're showing a lot of different, a lot of write-offs on each property. So in most cases on your Schedule E, you're losing money on a lot of these properties. Whether you are or not, that's usually the way it works. So we have a program that as long as you have to have a 620 credit score or above, which gives you a lot of leeway there, as long as you put 20% down or 25 or 30, there's different programs, but even 20% down, as long as the rent comes in higher than the actual mortgage payment, you're approved. It's a debt service cash flow loan. And what we're doing is we do an investor loan. So it cannot be a primary residence because it doesn't follow TRIG guidelines. It's an investor loan. And if it is, what will happen is we'll send out an appraisal. They'll do an appraisal on the property value, and they'll also do an appraisal on the market rent. So if the market rent is $3,000 a month in that neighborhood, let's say, and your payment is $2,999, absolute approval done. No income verification, no job verification, nobody cares. So that's a beautiful. I'm doing about 5 of those right now because they'll do up to 10 per person. So if anybody wants to be an investor, that's one of the tools that we show people how they can end up with multiple properties. Now, I have multiple properties. I've had them for many, many years, and I acquired them just through the years. Okay. Well, nowadays, as an older person, when I retire, I can live off the rent from these things. And when you explain this to young people, it's so important because you could just tell that everybody's itching to do that. They all want to do Airbnbs. The young ones, they want to do Airbnbs and all that kind of stuff. But that could be a little volatile in certain ways, but certainly doable. But I have one client who's a young guy who's he and his wife, they're probably 30. They're on their 4th property, and big properties, not little stuff. All primary residences. As soon as they save up more money, she's an accountant, and he works for the city. And as soon as they have a down payment, they buy another house, they rent out the one they're in, they're on number 4. And they've paid off quite a bit on those other properties. So they're going to retire very, very early. And when I first met him, this young man, before he even met his wife, we had this conversation. What is it that you're looking to do? Well, I want to have multiple. How are we going to do this? Okay, well, he didn't make a ton of money at that time. He was young, just got out of college, met his wife. They bought their first property. And I've had many, many meetings over the years. He just called me last week. They're looking at another one. And his plan is he wants 10 houses paid for by the time he's 50, 60 years old. Very doable. I have a ton of those kind of people. So we show them how to do it. And some of them with this program works perfectly because it's a cash flow program. Down the road, you refinance it, you do whatever you want, if you'd like to or not. As long as it's cash flowing, then it's a positive asset.
Well, Ed, I really want to thank you so much for coming in and helping us today understand the mortgage business. Is there a last message that you'd like to give everybody before we go to break?
Yeah, I was talking to my son, who's an attorney with crypto and blockchain and all that kind of stuff, Horizons Law down in Miami, and he was telling me about Bitcoin and all the different things that's going on with crypto, what the government's trying to do to stop it, and so on. And the one thing I left him with, I said, Mike, I'm just going to tell you one thing. I said, I've invested in real estate my whole life. I've never lost a penny on real estate, ever. He said, really, Dad? Which I think he knew. I said, wow. I said, so I'm not sure that you could say that in your industry. So the real estate industry is pretty good if you buy right.
Well, I agree. And, we'll talk on another episode about what I call security tokens. I got to get a hold of Mike and we got to talk about that and catch up. Ed, thanks so much for being here and sharing your ideas on the residential mortgage business. I hope that Greg gets his loan closed, or Paul, whoever's back there in the background, really hammering away. I want to thank you so much for helping myself and my clients and my friends, help them build wealth and have a better cash flow. So thank you so much, Ed Cairo. Ed Cairo with American Home Finance Group. NMLS 336310 is the corporate. Ed has his own. It's on his business cards. And every time I put up my ads or my posts, I always put up my NMLS number and the American Home Finance NMLS number, always working hard to stay within the guidelines of both the federal and state government on this. So, Ed, thank you so much. We'll be right back after this brief high five to our folks at Warren Henry. Thanks again to Ed Cairo and the Mortgage Brothers at American Home Finance Group for being on the show.
Thanks, Jim. Appreciate it.
Well, there you have it from Ed Cairo. How tremendous. It doesn't get any better than that. The Mortgage Brothers, my friends in the residential mortgage business, we've done a whole bunch of mortgages for my friends and my clients. They all love Ed. Hopefully they love me too. Somebody I really love is my friends at Warren Henry. They've been a sponsor on the show for over a decade. I want to thank them very much. Thank you to, of course, Warren. I want to thank Eric, Larry, Ismet, Maytal. They're all great people. They all work at Warren Henry. They consider us part of their family, and we consider them part of our family. And remember, when you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check out our friends at Warren Henry. Land Rover, Range Rover, Infiniti, Jaguar, and Lincoln up at 151st and Biscayne. Gainesville, they sell Audis. Down in the Keys, they've got all their great nameplates. South Dade, they've got their store there that does Land Rover, Range Rover. What do all those cars have in common? They're all great cars. They all come with the Warren Henry Advantage. That's something you get when you buy your vehicle from Warren Henry or lease it from them. It's a whole bunch of services, loaner car, key replacement. They'll polish up your rims, help your car stay good looking. They'll give you 3 days to return your car after you buy it or lease it. Nobody does that because they're just such tremendous vehicles and everybody's really happy with them. Let's see. They'll guarantee that you get a great value on your trade-in, that you get the best price on your lease or sale. They will, just give you excellent service and make sure you're a member of the family. So join me, my beautiful wife, Vivian, my mom, lots and lots of my friends. Just referred somebody to the Audi place in Gainesville the other day. We're all members of the Warren Henry family. You should be too. Always the best price, always the best service, always Warren Henry. Mr. Mendoza does such a great job with all that. High five to Mr. Mendoza for that. High five to me for helping all my friends and clients. Just helped a friend of mine that's a small businessman close a loan on some retail condominiums he owns here in Coconut Grove. Working on some big industrial projects for our clients. Butters Development, Butters Group. We've done some industrial with them and their partners. We've got some more in the hopper with them. We're working on a bunch of residential apartment loans, development, permanents, and bridges for some clients in Texas, Colorado, and Florida. And we've got all kinds of things we're working on: stretch construction loans, C-PACE, and creative solutions for a lot of people that just can't get financed. We're working with clients from all over the world: Brazil, Argentina, Australia, New Zealand, Europe, Canada. What do we do for them? We help them solve their problems. Remember, my personal brand is that I self-actualize by helping other people achieve their dreams and goals. I do that by solving their problems and bringing them peace of mind. High net worth investors, family offices, institutions. We work with all of them. We get direct calls with them. We get our packages and information to the top. And we get there first so that you get the best deal you possibly can while they're still in the market, because things are changing rapidly. So reach out to me, call me, DM me, email me, because remember, whenever you call me, it's always all about you.
Welcome back to Freed on Business. YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
I want to thank our friend Ed Cairo and his brothers who were in the background making a lot of noise today. We heard everything from how to get your home creatively financed to basically how to ensure your retirement by buying investment homes. Ed's pretty good with all of that stuff. I want to remind everybody, coming up, we've got episodes with Bruce Turkel on branding. We've got Tom Handler on family offices. And of course, we're getting ready to do some more episodes with Olivia Ramos on technology. Stick with us. We've got some great shows coming up. I want to thank everybody for being here today on Freed on Business. I want to again thank our sponsors for over a decade, Warren Henry. Thank you so much to our friends there. They do treat us like family. Really is an excellent business model. We have value system alignment with Warren Henry, with American Home Finance, and I'll bet you with you as well. So remember, we'll be here. We'll drop a new episode next Wednesday at noon. I want to thank everybody. Our other sponsors include our friends at the Bergstrom Center for Real Estate Studies up at the University of Florida. Thank you to them. High five to Tim Becker and the rest of the group up there. And remember, I'll be here next week because I love doing it. The person that wants to do something finds a way. The other finds an excuse. Now go out there and make it happen. God bless you, and God bless the United States of America. Mr. Mendoza, time for you to shine.